But Gagan, Banga, VC and MD at Indiabulls Housing Finance joins in to talk about how the quarter gone by has been for them. Gagan, hi, good morning. Your profit growth has been pretty healthy and we're seeing a strong NII growth as well of 30-odd%. What's led to this kind of strong performance despite demonetization?
The macro of home loans, the entire environment continues to remain extremely strong. We had commented once demonetization exercise had begun that there would be tremendous tailwinds on the liability side. Cost of funds would come down, and we have witnessed the same through the course of quarter 3, where our margins have expanded to 327 basis points. What we are continuing to witness through the course of January as well is that home loan rates have come off sharply to 8.65%. But more importantly, if you adjust it for all the tax incentives which are available, under the Pradhan Mantri Awas Yojana, the effective mortgage yield is now 2.4%. So it is after close to about 14 years that we have a situation where there is convergence between an equated monthly installment check and a rent check, which creates a very strong demand situation, backed by the fact that all financial regulators, Reserve Bank of India, SEBI as well as IRDA, have over the course of the last few months directed pools of capital towards the housing finance industry, which has ensured that both there is adequate liquidity as well as liquidity available at competitive rates, which in the short term has allowed us to also pass on all of this benefit to customers, and now customers can avail of home loan rates at a headline yield of 8.65%. So I would say that much of the strength that one is witnessing in our earnings is coming largely on the back of a very positive view on cost of funds, complemented by our lowered cost income ratio. So we
Gagan, spreads have expanded a bit compared to last quarter. What's led to this, and is there scope for further expansion?
So we've been guiding that our spreads would remain in the range of 300 to 325 basis points. Quarter 3 saw a one-off in some sense, that there was suddenly a very sharp reduction in our borrowing costs thanks to largely demonetization. So I would say that spreads at 327 basis points are at the absolute highest end of our guided range. We are comfortable with spreads being closer to 300 basis points, and we would look at an opportune time to use this additional leverage that we have to actually pass it on to customers and grow at a slightly faster rate, which is why we are optimistic that our loan book would continue to grow at 30% in due course of time. What one has also witnessed is that while November saw some softening of demand, by December the demand for home loans has come back, and January is turning out to be a very steady month. So all in all, I think that spreads of 300 to 325 basis points would be maintained, and whatever extra we get, we will use to ensure that we continue to grow at 30% on book basis.
Could there be a slowdown in the loan book, Gagan? What kind of disbursements have you clocked, and what's the outlook for quarter 4?
So we've disbursed close to about 9,000 crores in quarter 3. We will disburse around 10,000 to 11,000 crores in quarter 4. Quarter 4 tends to be a busy quarter, and with the interest rates being where they are, one is reasonably convinced of very strong demand. I think the announcement on December 31st of the revised limits under Pradhan Mantri Awas Yojana is only going to add further momentum, with the limits going up to now 12 lakh of rupees for the subsidy. So the low interest rates complemented by Pradhan Mantri Awas Yojana, all of that should ensure that our disbursements would be very strong this quarter and should be in the range of 10 to 11,000 crores as against 9,000 crores in quarter 3.
Well, loan growth has been at 27% CAGR in last 5 years. Is this sustainable for next 3-4 years?
I would, restrict myself for the moment to a guidance of fiscal 2017 and fiscal 2018. So for up until fiscal 2018, we've guided that we should be growing our book by about 30%. We have demonstrated through the course of the last 9 months and the course of the last 3 months that we are indeed growing the book at a little ahead of 30%. And one remains confident in light of all the macro features that I've been talking about that we should be able to grow comfortably at about 30%.
Right. Gagan, while headline asset quality is stable, you do have a high exposure to the LAP book. So tell us, how's the NPA stress been in the housing loan as well as your LAP book this quarter?
So we had taken quite a unique initiative close to about a year and a half ago, where we started getting rating agencies CRISIL and ICRA to rate our LAP portfolios. Subsequent to demonetization, we published a first report in December, and along with this quarter's earnings, we published a second report where CRISIL has analyzed close to about 15,000 crores of loans and have published the performance of the same. And in both loans against properties as well as home loans, the collection ratios remain unaffected completely because of demonetization. So they are as stable at well above 99%. So collection quality has actually held up extremely well and strongly for loans against property, home loans, and the overall portfolio, which is reflected in the steady number of both gross as well as net NPA, as well as the fact that our credit costs continue to remain within the guided range and the guidance which we had given in April of 2016, that for fiscal 17 we will have credit costs of 70 to 80 basis points. So far we are running with an annualized credit cost of 74 basis points. And now, having seen 3 months of collection data subsequent to demonetization, one is reasonably confident that there would be no additional slippages which will be coming through as a cause of a demonetization, which is why a few weeks ago I had also exchanged with stakeholders that Indiabulls Housing has no intention whatsoever of using the forbearance given by RBI for loans of under 1 crore of rupees.
What is your current mix between housing, mortgage, LAP and other businesses?
So we've been growing our home loan book faster than our overall all other assets. So while our loan book has been compounding at 27-28%, our home loan book has been compounding between 30 and 35%, and the other portions of our asset book, which is both loans against property as well as commercial book, has been compounding in teens. That practice would continue. Our direction is to make home loans as 2/3 of our assets over the course of the next 2 to 3 years. So home loans would continue to remain the mainstay of the company, and that would continue to witness a growth of between 30 and 35%, and that would also be reflected in the course of the next 12 to 15 months of business.
You think the dividend payout of 40% could sustain? Is there a policy change that you will have here?
So our long-term dividend payout policy stands at 50% of profits, and dividends is something that we have maintained to pay out steadily over the course of the last 12 years that we've been listed. We had reached a dividend payout which was higher than 50%, and then we took a decision of capping it subject to board approval at rupees 36 per share per annum. As we speak, through the course of this year, we will cap it at 36 rupees, subject to fourth quarter performance being as good and shareholders and board approving the same. Next quarter onwards, we expect the EPS of the company to enable a slightly higher dividend payout, which we would recommend to the board.
Right. Lastly then, Gagan, what are your budget expectations for the housing sector? Because it seems like, lots is going to be focused on this particular sector this time around.
I believe the government is on a mission of enabling housing for all by 2022 to become a reality. Last year in the budget, they had removed the corporate tax for affordable housing projects, and they had also marginally enhanced the tax breaks given to individuals taking home loans. My sense is that there would be continuation of that policy, where further tax incentives would come for affordable housing development, as well as there would be further tax breaks for people buying homes in what is classified as the affordable housing segment, besides the notification of the revised rules of Pradhan Mantri Awas Yojana. So all in all, my sense is that the convergence of what I have been saying, the equated monthly installment check of a home loan and the rental yield which prevail in the country would only become tighter, and that should allow people to actually afford a house and move on from living in a rented house to moving in their own house.
Okay, Gagan, great speaking with you. Thanks much for taking the time out and joining in today. Indiabulls Housing Finance, the stock holding up by about 1.25%. It's seen its bit of volatility in the first few minutes, as is the market. So after having started off quiet in trade, a little bit soft, we're at 83.67 odd levels. So roughly around where we left it off on Friday. It seems to be making an attempt to claw